Celsius Holdings has crashed 10% today. Why? Welcome back to Strongman Personal Finance. Apparently, there's this analyst, look at the first four letters of that word, named Robert Moscow. I wonder what country he supports in the Ukraine. This guy has apparently cut his price target on Celsius Holdings by 20% today. So some random dude from TD Cowen, a reputable broker that I have never heard of before, apparently cut his price target. It's probably some guy on Twitter. And Celsius stock crashed 10% today. Now, why do people hate Celsius? Well, all you value investors, Paul Gabriel, you don't like high price to earnings ratios. Well, let me explain something to you, geniuses. PEs reflect expected future growth of the company's earnings. Generally, higher PE stocks are expected to have much higher earnings growth than low PE stocks. Just because a stock has a high PE does not mean it's a bad stock. So let's dive into this article a little bit more. We're going to do some analysis, some stonk analysis of Celsius, because I am bullish. I am bullish like I've never been before. As a matter of fact, Celsius is 10% cheaper today, and I'm going to be scooping up about 150 shares tomorrow morning at 9:30. So, this guy, Mr. Moscow, Mr. Communist, has cut his price target by 20% to $68 a share. What is Celsius trading at now? Oh, $52.70. So the analyst still has a price target well above the current stock price. And the average price target of analysts is $80 with a 53% upside. Now, I don't know about you, but I'd rather get 53% than invest in an index fund and get like 8% for over the next 10 years or whatever. Okay? So Celsius is sold off. Oh my God, it's the end of the world. Now look at this chart right here. Looks pretty bad, right? Oh my God, it's down 5.78%. Let's back out a month. Oh, it's down 10%. Year to date, oh my God, it's down 2%. 1 year, it's up 3.94%. Oh, look at that. What does this look like to you, ladies and gentlemen? It looks like a temporary sell-off before it rockets up again. You can see the support line right here at about $50. Is this hard? So, let's go ahead and let me give you my bullish case on Celsius. Number one, Celsius is healthier than other energy drinks. Why? Look at the label. It says it's healthy. Look at Celsius's market share compared to Monster and Red Bull. Now, I don't know if you heard of Red Bull and Monster, but they're pretty good. I prefer Monsters myself, until I had a Celsius, of course. But we can clearly see that Celsius is only 5.9% of energy drinks in the United States of America. What is Celsius' total addressable market? How big could they potentially get? Even if they become half of Monster. Oh my God, that's a 15% market share. All they got to do is steal a little bit from Red Bull and Monster, or even better, potentially become the most sought-after energy drink. And guess what? This stock will vertical line. What is the next bullish indicator? Well, I read a little bit about a dietitian talking about Celsius and how it's healthy, etc., etc. But here's the most important thing. Who is this marketed to? It's marketed to females, young females. If you don't like this stock, you don't like females. I'm just kidding. But think about young females. They disproportionately attend college. They're going to have high incomes in their early 20s and in their 30s. They have a lot of spending power. And I don't know if you knew this, Mr. Inkwells, but women like to spend money. Okay? They spend money. And they will spend money on something they think is healthy. Have you ever seen a girl drink a Monster? Think about it. Have you ever seen a female drink a Monster? No. Okay? So Monster is out the window. Have you seen a female drink a Red Bull? I've seen some drink Red Bull. Okay? I've seen some. But what do you see? Half the population likes Celsius. Okay? Oh, but some analyst cut the stock, his price target. Oh my God, wow. So let's look at this horrible company, okay? Oh my God, high PE ratio. Oh my God. Even though analysts say it's a strong buy, and I trust them. Let's look at quarterly revenue. Oh, it's basically gone up. Now you may be like, oh, it's flatlined, bro. Yeah, sometimes revenue dips, okay? But we could see the clear trend of revenue massively increasing. As a matter of fact, in the most recent quarter, revenue went up 37% year over year. Wow, okay? Let's go ahead and look at margins. Gross margin has been steadily increasing. Half of the sales price is profit from their energy drink. Half of it. Okay? You pay, $2 for Celsius, or your girlfriend does, and, they make $1. Wow, that's pretty good profit, okay? Look at their operating margin. This thing is a money printing machine. They've been profitable for 5 consecutive quarters. Wow. Profit margin itself and free cash flow margin. They're generating consistent free cash flow. Let's go look at some other metrics, okay? Let's look at operating cash flow. Oh, it's vertical lining. Oh, this is a dying stock. Analyst Mr. Moscow, Mr. Invader, Mr. Plunderer. He said it's only going to be $68, even though it's $52 right now. Let's sell the stock. What a freaking joke, okay? Literally everything about this company is just amazing, okay? Let's look at some of the valuation. Oh, it's as cheap as it's been since like 2021. Oh, but it's high. Yeah, growth, okay? Man, let's go look at their balance sheet. So this is their most recent quarterly report. We know they have pretty amazing revenue. Let's go look at their balance sheet. So they have $870 million of cash, $880 million of cash, $200 million of receivables as of March 31st, 2024, and they have total current assets of $1.3 billion, mostly in cash and receivables, okay? Current liabilities are $315,000. They could pay off literally all of their debt with their cash and still have like $300-something thousand left over. Oh my God, sell Celsius. Oh my God. This company's balance sheet is ridiculously good. We've already looked at their profit and loss. They're crushing it. Look at their interest income. They're making bank off of those cash holdings, okay? But that's even before operating. That's after operating income. Their operating profit has basically doubled. So their revenue is up 37%, but their operating profit has almost doubled. When profit almost doubles, I guess that's a bad thing. I guess we should sell the stock. The stock. Okay? Literally, I am so bullish. I've never been more bullish on a company in my entire life. I don't care what the analyst said. We're Mr. Moscow. I wonder what he looks like. He probably has, Slavic features. But this guy is just clueless. Okay? Apparently, he doesn't know how to read financial statements. What a clown. Anyway, hope you enjoyed the video. Hope you understood my bullish take on Celsius. If you want a personalized video, you can send $50 to me. You'll see the pinned comment below. If you want to buy my book, check out Stop Being a Broke Loser. It's on Amazon. It's about $13. If you want an hour of tutoring with me, you can send me $75 and I'll teach you how to read financial statements. And if you want to join my free Discord, that'll also be in the pinned comments below. I hope you have a wonderful night. Cheers!